Welcome to today's episode of Canadian Mortgage Weekly. I'm so excited that you guys are able to join us today. We have a great episode planned. We also have Joe back. It is great to have you back, Joe. I did the last couple weeks just covering off some first-time homebuyer topics, but now Joe's back and he has prepared a really awesome new series that we're going to be going through for the next couple weeks. So thanks for joining us today, Joe. How are you today?
Hey, Sam. Yeah, that's great introduction there, and I'm really excited today to do this series with you. And it's great. It's really great to be back. It was good to also have you on last week to do the first time homebuyer series there. I know you talked about a lot of good information there for first time home buyers and what they need to do to get started, as well as some tips and some rebates and some credits that they can get. So definitely, if you're a first time home buyer, check out Sam's series that he did. But yeah, great to be here. And Sam, it's good to have you on as well. I know you've been with Mega Mortgage now for just over a year. I hope you've been enjoying it. Originally, Sam is from Ottawa, in case anyone is interested. And he moved to Barrie. He's married to Grace Thompson. And actually, if anyone's looking for a photographer, great photographer out there, check out what's the Facebook page there, Sam? What's the name of the Facebook
I
page?
think it's Grace Thompson Photography. I think is her site and her Facebook as well. Yeah.
Oh, that's great. Well, perfect. And yeah, great to have you on today, Sam.
Thanks for joining us. Yeah, and if anyone doesn't know yet, so Joe's been in the mortgage industry for over 10 years, lives in Aurelia, but we serve all of Ontario, right, Joe? Especially with COVID, everything's virtual. We can be as remote as we want these days. It's, I guess, a perk of the trade.
Yeah, you bet. You know what? Going virtual has been something in the past that I've struggled with because I love to meet people in person, and I always like to meet with my clients in person to get their mortgage all uh, uh, tidied up. But in these days, it's been all virtual since March of 2020. And it's been something that has been a huge shift for us. So I'm glad that we've been able to do that. And now we're pretty much all virtual. And a lot of clients actually really enjoy that. They really enjoy being able to meet with us with their baby in hand on a Zoom call, or maybe they're not wearing pants, or whatever it is that may be the case. It's good to go virtual and give people that extra flexibility.
Absolutely. I think I've done quite a few FaceTime video calls where they're talking in kind of hushed tone because the kids are already put to bed. But yeah, Zoom's been great to be able to actually see people, from a virtual perspective.
You bet, yeah, and I'm sure you've had your clients appreciate just being able to meet like that because they don't have to drive anywhere. I mean,
That's
I
right.
remember I remember going to meet with folks and appointments, and you would actually drive to a place and then meet with them there, and then they would have to drive there. So there's all that, but yeah, it's been good, and I'm glad to be back today. And today we're talking about starting a really awesome new series about those who are retired and or just try to folks later in life that are looking to move or sell, buy, or even refinance their mortgage. It's going to be a great show.
Yeah, absolutely. I'm really excited to dive in. And there's been lots going on in the mortgage industry lately. There's been some new policy changes, things that are changing. We've been looking at some economists' perspective from a couple different banks. And one of the big things that I covered off really briefly in the last video is actually this new first-time buyer incentive. So they've revamped it. There's a 2.0 that is officially launched. I know that we heard about it months ago that it was in the works, but it's officially launched as of I think 2 weeks now. That
Wow.
allows you to borrow more if you're looking to buy in Toronto, which I know and you would know as well, Joe. It was really hard to get Toronto buyers into the first-time home buyer incentive, right? It was the qualifications weren't quite there to actually get them in. So hopefully we'll see some changes with this new program.
Yeah, well, the changes they've put out are been amazing. I mean, you can buy now a house in the GTA. They've raised the amount you can borrow by hundreds of like a few $100,000 now. So It's definitely a big boost. So if anyone in the GTA is looking at or the Vancouver area as well,
Yes.
and the Victoria area as well,
Mhm.
looking to buy a home. I mean, from what I understand, they can borrow a few $100,000 more, and the maximum income has now been increased as well, right, Sam?
That's right. Yes, they've increased household income, and I think the figures, the old program used to be around 500 and 5,000, and now the qualification, like maximum theoretically, is 722.
Wow.
So it's over 200,000 more, which is really beneficial, especially if you're purchasing in the market where having a maximum purchase price of 500 doesn't get you too far in the GTA. So hopefully we'll see this actually pan out and help first time buyers out.
Oh, that's great. Really glad to hear that. And I'm really excited just to help some more first-time home buyers with you, Sam,
Mhm.
on that. I know that in 2020 and going into 2021, we were working with a few first-time home buyers who actually took advantage of the first-time home buyer
Yeah.
incentive version 1.0 that came
Mhm.
out. It was a little bit of a challenge, but we successfully were able to do a few of those, and that's great. So looking forward to just helping anyone out with first-time buyer incentive 2.0. Awesome.
Hmm.
Yeah, and there's some new news as well that's coming out. I know that there's that stress test that's coming out on June the
Yes.
1st. It has not officially been confirmed by OFSFI, which is the governing body for mortgage rules in Canada. But essentially, the banks have already started sending us brokers and agents and lenders have been starting to send out notices saying that these are the changes, that how the banks are implementing them, as well as when they will be affected. All the banks are saying that uh, it's not till June 1st, and it's still a maybe. But from what everyone is saying and the language that the banks are using, it's sounding like, and it was also featured in the TD economic update, that this is a 99.9% sure thing at this point.
Mhm.
Yeah. And Sam, as you know, this affects only uninsured mortgages, which means mortgages with 20% or more down payment. And it's funny, right, Sam, that that anyone that puts less than 20% down gets subjected to a lesser stress test. Isn't that right? Isn't that funny?
Yeah, that is right. It's good to know because I think my assumption is the policy is to again help first time buyers. I'm not sure how much the
Yeah,
new stress test will actually push anybody out who's putting over 20%. But it'll be interesting to see the effects that it actually has in the market once that because everybody who's buying a rental or an investment property needs to put 20% down. So it'll be interesting to see how it affects the actual market if we see less, rentals being purchased and more first time permanent. This is my primary residence. But yeah, it'll be interesting to see, what the actual end result is of the new policy for that.
exactly. And this is not yet confirmed. And Sam, this is new information for you as well that I'm bringing up now. But something else I've been hearing about, and some other brokers I've been chatting about online on some groups I'm a part of,
Hmm.
that they're saying that these stress test changes for mortgages with 20% or more down will actually not be. These rules will not affect lenders that deal with mortgage brokers that are not banks. So that's a
Okay.
mouthful, but say, for example, a big bank, you can't, will be subjected to the higher stress test, whereas a monoline lender, which is a lender that just does mortgages through a mortgage broker, will not be subjected to the test because of some technical, because of some technicalities in the way that they classify their mortgages. So that's something that we'll save for a future episode if it actually comes to fruition. But for now, that's one of the. I also wanted to share that with you there as well,
Yeah,
Sam.
it's great information to know.
Yeah, yeah. So another thing is that Sam and I and Terry Land at the office have been looking into what's happening with the economy, and in Canada, all the lenders now are coming out with their economic forecasts. So we've recently heard TD's economic forecast this week, and Scotiabank's economic forecast this week as well. And there's some really good news coming out of those forecasts. They're saying that right now we're on fire with the real estate. I mean, there are the articles coming out now saying that there is a lot of hot real estate. So there might be a little bit of cooling, and that's a consensus across the board. However, the consensus is that the third quarter is going to be even crazier than the first quarter. So I mean, like it's something that we've seen. As you know, Sam, it's been a very crazy first quarter, January, February, March. So to hear from large and important economists at these large banks that that the third quarter is going to be even bigger, it's something we need to get prepared for.
It is, and it's definitely, it doesn't sound like much when you're saying it, but when you look at how busy the first quarter was, right? We had seen, deals were flying in. So the fact that it's even more coming up this fall, it's gonna be quite interesting. And I liked on one of the economic videos we were watching, what was his analogy of a slingshot, right? Where it kind of like there is that cool period, and then it just launches into this burning market, as you were saying. So I guess we're heading into that new phase, right?
We are, and it's really going to depend on how coronavirus and the vaccines play out. From what I'm seeing, first doses are happening now. Second doses will be happening August, September. So that really plays into the fact that, come the fall, there's going to be a lot of folks that have their second dose. There's going to be a lot of people that are ready to move, that have been waiting on the sidelines. And hopefully the economy will open back up full-fledged. So we could see a lot of people that have been waiting on the sidelines to move, to make those decisions. Whereas others have been making those decisions. Like you said, the slingshot is just going to throw all those people into the market into the fall. All right, we should get started on our presentation today. I know that we only have a limited amount of time. So Sam, we'll just dive right into it here. I know that we've been chatting a little bit about, what it takes to purchase a property. I don't know if you can see this here. Let me just actually get out of there, and I'll actually do a presentation of this. And I know we've been chatting a little bit about, what it takes to buy a home when you're retired, or perhaps you've been working full-time all your life and now you've reduced your hours to part-time. It can be hard to qualify for a mortgage.
For sure.
Yeah. So let's just see here. I got this here. And are you able to see that?
Yeah, it looks great.
All right. So this is episode 20. So before we actually continue on, a big celebration to episode 20. It's been a good year for Canadian Mortgage Weekly Live, and I'm excited to be on episode 20 and hopefully many more episodes to come because I really enjoy doing this. So buying and selling your home and possibly refinancing your home while retired. I know this is a big question a lot of people have. We have people calling in. They'll tell me, you know what, Joe, I've retired. I'm on CPP pension now, and I have a $1 million home, and I'm looking to sell that home and just move my $300,000 mortgage to a smaller, lower priced home. Well, that can be an issue, especially if your salary has been eliminated.
Right.
Yeah, so some typical scenarios, and it's a two-part series. So today we'll cover off some of the basics, some typical scenarios here, folks selling and trying to secure a mortgage on a smaller home, like I just mentioned. There's also folks that will, they'll have a home and they'll want to make it more accessible for themselves. Maybe they want to put in a stair lift, make it more accessible that way. And they will need some money for those renovations. Or maybe they'll want to put in an elevator and they'll need some money for those upgrades. Or perhaps they'll want to make the outdoors more accessible or add some more living space because of COVID and being more inside more. Those are all considerations that we're seeing right now. And also the last one being debt consolidation is the last one there. These are the three biggest scenarios we're seeing. And as you know, Sam, debt consolidation is a big one too. People sometimes get in a hiccup in life and they may need to use their home equity to pay off some debt. It's not a bad thing, and it actually puts them in a better financial situation. Thing is, once you're retired, it's really difficult because the income is no longer there. However, maybe your equity is high and perhaps you have a lot in savings. Yeah. So in these cases, we see a lot of the folks that are buying and selling and wanting to refinance. They're often only earning Canada Pension Plan or old age security from the government, which is not a very large amount of money each year. These folks, they do have great credit, typically over 700 credit score. They have great assets. Typically, they own their own vehicles. Typically, they have a very small mortgage left on their home. And typically, they have a lot of money tied up in RRSPs, TFSAs, and other stocks and bonds. But the thing is, we're seeing, Sam, it's, as you know, if we don't have an income, typically the banks and lenders and credit unions, they don't like those kind of files, and they typically don't approve them.
Yeah, it becomes very difficult and it can be hard to understand when you have the assets you have such a low mortgage amount that you can't qualify, but that really is a huge determining factor in what your actual income is, to, have any mobility in the housing market.
Exactly. And something that would be a great thing for someone to do is if they're planning to retire, or they're planning to cut down their hours, would be to actually do all these changes on their mortgage and moving before they actually pull that trigger instead of after, because then we wouldn't have to worry about all these considerations. Yeah. So, I mean, we're talking about these typical struggles again, not enough income because it's a fixed income. Folks aren't working, they're enjoying life, they're relaxing, they're traveling, they're RVing, they're camping, maybe not camping, but all those things. They have good or great credit, lots of equity, and yes, cannot get approved through typical banks. So some solutions that I wanted to go over here that aren't the best solutions, but just some solutions that I see people consider in this stage of life, which we would not necessarily recommend unless they absolutely warrant them, would be to either obtain a private mortgage, which would be usually a higher interest rate than a bank, or go with an alternative or B lender, which is also a higher rate than the bank, not as high as a private mortgage, but sort of the in-between section, or lenders that specialize in retired financing. And this is where, there's no bank you can actually walk into today, no branch that you can actually walk into today that specializes in this type of financing. So whether it is you're walking into TD Canada Trust, Bank of Nova Scotia, any of those big banks, they will consider your mortgage based on income, whereas there's some retired specializing lenders that focus on your equity. And that's what Sam and I wanted to go over this week and next week as we cover off our series, because there's a lot of different options you can do. And if you're looking to move or make any changes on your mortgage and you've already pulled the trigger and cut back your hours or retired, this would be a really good solution compared to a private mortgage or an alternative lender.
Yeah, and I think that's really the purpose of what we're going for with this, is showing that there's options available that are less stressful or less financially strenuous, because we know from working with some clients who can't go through a traditional A-list lender, there's quite a lot of fees, and it adds up quite a lot trying to process it as a private or alternative lender. There's a lot going on, and especially at the later stages of life, you don't want to be dealing with going through this this cartwheel process to get approved. We want to have options that are available to you, specialized for what your needs are.
I agree, Sam. So just looking at the next slide here, what we'll do next week is we'll have Barry Ray join us from Home Equity Bank on our show next week. And I'm really excited about this because not only are we having a bank join us, but specifically in this area, they will speak to some of the ways that they can actually help our clients get what they need if they've pulled the trigger on a retirement or cutting back their hours, and TD Canada Trust or Bank of Nova Scotia or those big banks just won't approve them anymore because their income is too low, and they still want good rates and they don't want to pay any fees and all that stuff. So we're gonna have Barry Ray from Home Equity Bank come on next week, and we'll have a little chat with him and go through some examples. And I'm really excited about that, Sam.
Yeah, me too. It'll be great to have, really a expert and financial, voice on one of those lenders. And I think it'll be awesome to run through a couple, like you were saying, a couple of those scenarios of, what it actually does look like for, people who have retired, their qualifying amounts, and some options that are available to them.
Awesome. Yeah, I'm looking forward to that. I know Barry's got some tricks up his sleeve that he will share with us on Thursday next week. But until then, we just wanted to take a moment and go through some of those considerations and struggles that people typically go through when they're trying to get a mortgage while they are retired or have their hours cut back. Because like I said, sometimes those people are caught off guard because they have great credit. They'll have hundreds of thousands of equity. Perhaps they'll own a $1.5 million home and they'll have a $300,000 mortgage. That's a very small amount of mortgage compared to how much house they have. So from the client's perspective, I mean, I understand you're coming into the appointment thinking, I have such a small mortgage compared to my home value. I have all this money tied up in retirement assets. How can I, and I own my own vehicles, how can I possibly not get approved for a mortgage? But it's just the way the rules are these days. And it's not like it's 2008 anymore, it's 2021. And banks are actually looking at income these days. So when you have a lender that actually specializes in retirement financing and has all the options available like Home Equity Bank, which we've worked with before, it's good to be able to share that with everyone.
And to have somebody, who's in your corner, and all of the programs and products that they offer are specialized to your scenario, rather than the reverse of you trying to work into a new buyer, under all of those qualifications. It's really specialized to, your stage of life.
Yeah, you bet. So just to go over some of the items we'll cover off next week. This will be episode 21. We'll just cover off how there are mortgages available for folks that are retired, where you can actually choose to make payments or not. That can be good, especially later in life when you're on a fixed income. As well as we'll be able to look at some folks that because first-time home buyers right now are having such a hard time getting in the market. One of the things we're looking at is how parents can help their kids with buying a home. And I know Barry's got some information on how he can help that with some products available at Home Equity Bank.
Yeah, I think that's a huge one, as we're seeing a lot of buyers are needing to have that conversation with their parents, regardless of, stage of life, or like we're saying, assets or savings. Sometimes their income is not enough, and that's a very common conversation that we have with prospective clients that are looking to get into the market. So yeah, it's a really big topic that's becoming more and more common.
You bet. So I'm just going to take this opportunity to open this up to any questions. If you're watching on YouTube or Facebook, drop a question below. We'll see it right away on live. Or if we're not live, then go ahead and drop a question and we'll get back to you at a later point. If you're watching on Twitch or Daily Motion or any one of our other channels, some of these channels we've recently added, so if we don't get back to you right away, I will try to get back to you eventually. But right now, at this point, I don't see any questions. So a lot of the times, Sam and I, we do get our questions privately and after the show. So if you have any, do give us a shout. And if you have any, if you're a first-time home buyer, or if you are retired or know someone that could benefit from next week's episode 21 of Canadian Mortgage Weekly Live, tell them to tune in on Thursday at 11:30 for a special treat. All right. Well, thanks for joining us today, Sam. Again, Sam Thompson, mortgage agent with Mega Mortgage here in Simcoe County, and myself, Joe Bladek with Mega Mortgage, saying have a great week.